everybody, it's me, Myra, at Down Home Money, a simple approach to financial freedom. I hope you're doing well. It's Tuesday, it's my day, and we're going to talk market crash or boom. What do you think? Okay, so I want to share with you today some of the things that are going on that I think you need to know about. The only way we're going to know what's going to happen to the market is we look at the predictors and the things that are going on right now. And we got a bunch of them, you guys. So we've got a new administration coming up, right? Let's see if I can get that. There we go. New administration coming. We've got the virus. We have foreclosures and we have forbearance. We've got low interest rates. We've got unemployment and we have evictions. Oh my, we got a lot to talk about. So let's start at the very beginning. New administration. We're going to have a new president and we need to all accept him. We've got to stop the division in this country so that this great country can move forward. So we're going to have a new president. The virus. The virus, you guys, it's scary. And what's going on is affecting, and it will affect the market in the future. Right now, on November 20th, the daily rate of cases diagnosed was 198,585, and we're having 2,000 deaths a day. So we've got to get that under control, and there's light at the end of the tunnel. They're talking about the vaccine is coming. So just be aware that this virus is part of the reason our inventory is so low. It's part of the reason for the housing market being the way it is, because people don't want people in their homes. So a lot of y'all know I own 3 franchises, real estate franchises. I have over 600 agents. We sold over $1 billion worth of real estate last year in 2019. So I've got a bird's eye view of what's going on and I'm sharing it with you. So unemployment, let's talk unemployment. Right now, the good news, if it is good news, unemployment's at 6.9%. Back in April, it hit the all-time high of 14.7%. So it's getting better. People are going back to work and they're getting jobs. And so that's some light at the end of the tunnel, but our average is 5.76. So we are still high on unemployment. Foreclosures. We know the foreclosures are being, right now there's a moratorium on foreclosures, so no one's getting foreclosed on, but you do have a lot of people sitting in homes that have not paid. 16% of FHA loans right now are 60 days or more behind. So we are going to see some issues happening after the first of the year. If the new administration doesn't do something to stop that and they're, to push back foreclosures, we'll see what happens. So let's talk about forbearance. Right now, a lot of people took the forbearance option and we'll see if that affects them or not. We don't know. We're going to find out. Okay, low interest rates. Interest rates, wow. Let's see, I just had a figure here, 2.83% in October, a 30-year rate. Last year, it was 3.9%. So, and mortgage rates, you guys, keep going down. I've seen even lower than that. That was an average. So demand's going to stay strong. As long as these rates stay down, it allows people to buy more. It allows the prices going up, and it's okay. It goes hand in hand. And that too is scary. Let's talk about evictions. So we've got a moratorium on evictions. So people are sitting in houses that have not paid their rent. And they could have been sitting there since May and not paid their rent. So this is really hard on investors. Most investors buy on leverage. So they have loans on the property. So they have had to pay the loans for the property while the tenant is not paying their rent. Come January 1, eviction process will start. The courts are going to be packed, you guys, between evictions and foreclosures. We've got a backup of 6-8 months. So it's going to be interesting how that all plays out. So 7 out of 10 homes sold in October, 72% of them were sold less than a month on the market. Less than a month. Our supply right now is, I want to say it's 2.5 months. Let me find that. I've got it all written down for you. Inventory. Our inventory is down 2.7% just in September, just in 30 days. Our inventory totals about 1.42 million units according to NAR. It is down 19.8% since a year ago. And unsold inventory is at an all-time low of 2.5 months supply. It was 3.9 October of 2019. So even during a pandemic, as this existing home sales grew the last 5 months in a row, and this month from September we grew 4.3% from September. We are up 26.6% from October of 2019. So you see, all of this is happening, and it's crazy. This time we're in right now is a crazy time. So are we going to have a crash? Are we going to have a boom? We really don't know, because right now we're all living high on the hog. We're all excited because real estate's selling like crazy. My 3 offices are going to have banner years. I mean, like unbelievable real estate years. So I want to tell you, yes, we've got to have a crash because of all of this, right? All of this that's going on. Yes, we should be having a crash. But then I want to say, but we're not. And unemployment was at 14.7%. It's down to 6.9. But if we have another shutdown, everything changes again. Keep that in mind. And we might have another lockdown because of the virus numbers. So, a crash, a real estate crash is when, let's say your property, just to make things easy, is worth $100,000. And you put it on the market at $100,000. And there's lots of houses in your neighborhood that are on the market because the supply is really good. And a crash means that you would take 80, because it's about a 20%. For the market to crash, you would take about 20% off the value, your perceived value of your house. Because remember, the value is what a buyer is willing to pay. We've had problems with appraisers. Appraisers appraising property based on sales. We got 5 offers at this value, but it sold 6 months ago, maybe at this value. And so they think it's worth that. Perfect example. I was looking at a property to buy, an investment property, and it was listed for $542,000 back in before COVID, and it was in December of 2019. I did not buy it, and March came, and it did sell, and it sold for $485,000. So they got a bargain, right? Well, they just put it back on the market 2 days ago, and you guys, they listed it for $589,000 and have multiple offers. I talked to the agent, multiple offers. So that tells you about the price just in the last 6 months, right? Just the price is going crazy. So you guys, if you're looking to sell, now's the time. If you're looking to buy, make sure you evaluate, because you could get upside down to property. And that's what my concern is. And that's what happened in 05 and 06. People were paying too much for properties. We had a lot of California money coming into Texas. They thought all of our deals were great, and they kind of inflated our prices. And then 7, 8, 9 came, and people were upside down in their properties, and they had negative equity in their properties. So that happens. And when you're buying in this kind of market, in this heated market, that can happen to you. And a year from now, when all the foreclosures get on the market and the supply's back up and the demand's back down, and we go back to a buyer's market, then you could be upside down. And what if you need to sell? What if you get a job transfer? What if something happens? That's the kind of stuff that you have to look out for. And that's what I'm here for. So thank you for coming. Don't forget to subscribe. Give us a thumbs up. Every Tuesday, we do videos on life, real estate, and money. And remember, it's not how much money you make, it's how much money you keep and what you do with it. And a great Christmas gift, let me just share with you. My book is on Amazon now. It's a great Christmas gift, and I'll put it down below so that you can click on it to order it. But it's a great gift for a family member for Christmas. It is stories about real estate and investing and side hustles and making money and retirement accounts. It's a little bit of everything, the simple approach to financial freedom. We'll see you guys later. See you next Tuesday.